The company Kohls has been taken to the absolute woodshed over the past year, falling nearly in half in the last 12 months. And it makes sense why it's been beaten up so badly. In 2024, revenue got beat up pretty badly, falling in all 4 quarters, and 2023 and years past haven't been good for them either. But perhaps it's been overly beaten up, and there is the fear that it's in a dying industry of brick and mortar retailers. But there's something in investing called a cigar butt company, which was actually Warren Buffett's first major style of investing. And Kohls is meeting the descriptions of a cigar butt company. We'll get into that and so much more in this video. But before we get into that, the source of where I got this idea to make a video on Kohls as a cigar butt actually came from someone inside our Flank community. And that's really what we're trying to build. This is the power of shared insights, a group of individual investors who ascribe to a Buffett-style investing philosophy, all looking and turning over stones. Does this mean that I'll be investing in this company or I recommend you invest in it? No, but it is making me think, and there's a lot I like about this company. I'll give you my conclusion in the end, but it just goes to show that a community of intelligent investors working together is going to be a really powerful thing. There is power in shared insights. There's power in people checking your opinions to make sure you're not making a mistake or missing something. If you want to come see what we're all about, there's a link to our Discord in the comments below, and you can find this original analysis on flankinvesting.com. Anyway, what is an actual cigar butt? A cigar butt was originally Buffett's idea, but it really came from his first and most important mentor, Professor Benjamin Graham. And the idea of a cigar butt is if you were walking on the street and you found a literal cigar butt half smoked, you could light it up and get 1 or 2 more puffs. Does that mean that the cigar butt is an incredible business? No, it's soggy, it's been used, but there's still some value in it. Now, this idea originated in the 50s. They're actually very rare nowadays, and Buffett doesn't practice it anymore. Here's Buffett on why.
Many years ago, we gave up what I've labeled the cigar butt approach to investing, which is where you try and find a really kind of pathetic company, but it sells so cheap that you think there's one good free puff left in it. We used to pick up a lot of soggy cigar butts. I mean, I had a portfolio full of them, and there were free puffs in them. I mean, I made money out of that, but A, it doesn't work with big money anyway, and B, we don't find many cigar butts around that we would be attracted to.
So does Kohls meet the cigar butt definition? There's a lot to enjoy about the asset printer of Kohls. First, they have a lot of good real estate. Kohls stores are within a 15-minute drive from 75% of all Americans. That's really good real estate, and a lot of it is standalone real estate. And if you look at its book value, which will include the real estate, at $3.89 billion, over its current market cap of $1.56 billion, and book value is equal to assets minus liabilities, its book value right now is greater than its market cap. That's pretty rare to see. So on a liquidation side, there does seem to be value here. But in our flankers analysis, he actually brings up some really good points on how the business could be turning around. Their new incoming CEO has experience at Walmart. He's just coming from leaving Michaels, the art company, in which he sold it to private equity. And if Kohls saw a private equity exit, the usual trade could imply a 30 to 75% markup on its current stock price. And in a gentlemanly move from the outgoing CEO, he actually lowered guidance, which is part of the reason why it seems the street beat it up so much. Companies don't like lowering expectations on a company whose revenue is already going down. But flankers don't look at the day-to-day. We look at quarterly and yearly results on companies. We take a longer-term approach, even in these special situations. And the incoming CEO, Ashley Buchanan, isn't just some private equity shill. During his time at Michaels, he improved profitability and cash flow while also driving operational efficiencies across the business. And he introduced new ways to leverage technology and e-commerce. So he does build the actual business. This is a good thing to see in a turnaround play. And the business has a lot going on for it. They have a Sephora partnership and are opening full Sephora shops inside of their Kohls. They have a good partnership with Babies R Us. So the business is turning around and doing interesting things. And those partnerships really could go far with their known customer group. And if we look at comparables like Burlington, who have similar economics to Kohls, sitting at an $18 billion market cap. The question for me is, what is their future growth strategy if it is going to be a turnaround play? What does Ashley Buchanan actually plan to do to turn Kohls around? Or if they're looking for a private equity sale, which is totally possible, when Kmart went defunct, Amazon bought them and turned the stores into Amazon distribution centers. So if there is a buyout that's going to happen, I want a little bit more fidelity on that. So am I buying Kohl stock right now? I'm not someone who plays in cigar butt world, but I do really like the research. And this is the first cigar butt that I've gotten interested in a very long time. So I wouldn't be surprised if there are follow-on videos or analysis that I'm writing on Flank about Kohls. but I do have concerns about their debt and their slowing revenue growth. And I'm not sure that I fully understand the business yet, but I want to sign off with the last sentence of Darius's analysis because I think it really hits at what the thesis is. He wrote, "I don't think this is a great company at a fair price. I think this is a cigar butt company which is unjustly undervalued by investor fear and macro headwinds. I think this is a formerly strong company which is now merely weak fair company at an irresponsibly low valuation, with some genuine potential to turn things around with a restructuring of leadership." I'd love to get your thoughts on Kohls, and if you'd really like to see what we're all about, come join us and continue the discussion in our free Discord. Link in the description below. Thanks so much for watching this. We went a little bit into the numbers here. If that didn't make sense to you, you can check out flankinvesting.com. Not only is it a data platform that is built solely around Buffett-style investing, we also released a course that will show you how to pick a stock exactly like Warren Buffett does. I hope to see you there, and I hope to see you in the Discord as well. Thanks again so much for watching, and we'll see you in the next one.